Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, May 22nd at 2 p.m. Eastern. Well, hey, the Dow is at new all-time highs at 50,648 right now. Woohoo! And stocks are rising broadly as Treasury yields ease, leaving Wall Street set to cap off a winning week despite heightened volatility. The benchmark 10-year Treasury note yield shed 3 basis points to around 4.55% at one point today, although it has inched back up slightly. Excuse me, the 30-year bond yield also lost 3 basis points earlier today to trade around 5.07%. So on that note, let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $647.69, just below last week's all-time high at $749 and change. Very nice. The SPY is currently trading 7% above the all-time highs back here that were set in January at 697. And so if we go back up to where we are now, we see that the 20-day moving average, which is the red line, the 20-day is trading right at 731. The green line is the 50-day moving average coming in at 696 and change. And the black line is the 200-day moving average coming in at 678 and change. Now we know, and you can't see it on this chart, but the SPY climbed in a very strong uptrend from last April, a year ago, last April's low, and it started down at 481 back then, and it literally walked up. It's been incredible. It walked up its 20-day moving average, the red line, and a very strong uptrend for the whole year, pretty much until the October all-time high. I'm not sure that you can see it, but I think it's right there, at 690. And from those lows at 481 to 690 was a 44% gain, and it did most of it on top of the 20-day moving average. So that's pretty incredible. Of course, AI stocks were starting to come in and gain some profitability there. Then profit taking came in when we got back to where you can see right here. Profit taking did come in to the SPY, and the SPY dropped right here. Now you can see my cursor down below the 20 and the 50-day moving average. It dropped down to 652 in November, but it regained energy, jumped back up, and gradually pushed up here as it went back and forth on top of the 50-day and the 20-day, gradually pushed back up here to the first of the year in January. It came up to 697 right here. And it traded in a range then. It kept going. Then it dropped down here. Profit taking came in and it fell down below its moving averages here as it's moving through February, tried to pop back up, couldn't do it. Then the news of the Iran war took the SPY down down to 620, so many numbers on this. It traded down to 629. This was on the news of the Iranian war. Then the SPY bounced like, oh my gosh. It rebounded and moved up dramatically back up through its 20-day, the 200-day, the 50-day, rose in a very steep up move here to last week's high up here at 749, pulled back to 731, just a little tiny pullback here, then rallied back up to where we are now at 747. And that from here, down here, up to here is an 18% rally. I mean, this market is going nuts. So now you say, what do we do with this next week? as when that comes right after Memorial Day. And by the way, thank you to all of our veterans. We know that freedom isn't free, so thank you so much. Speaking of Memorial Day, I hope you all have a good weekend there. So we have this back. We're back up to our 747 at the moment. So next week, what do we do? Well, for resistance now, we're going to call it at 649. Excuse me, that's all we've got, though, because we're at these all-time highs. We have potential price support right here at 731, where that little pivot came in, and the 20 days coming in the same place. We do have a gap here at 723, 724. Don't know if that will do anything or not. Then we have another gap down. Then moving down, we have the another gap down here, right in there. Then we have the earlier highs, and the highs from January. And if you see that 696, 697, that happens to match up right now with the 50-day moving average. So that could be, depending, of course, on where the 50-day is going forward, but that could be a potential area of price support. Then we can go down here to the 200-day, which is at 678 and change. That could also be potential support. So next week on Wednesday, economic reports include PCE prices, important to the Fed. Also, we're getting the GDP, the growth domestic product, and new home sales. So we've got a bunch of economic reports next week that could make a difference. We also have more earnings announcements. So I'm bullish here, but as I've been saying to you the last few weeks, I think that at some point the market may need a breather. It's just the way things work. And so I am continuing to raise my stops on any of my overbought positions, and I am taking some profits on my short-term trades, definitely. As the old trader saying goes, you never go broke taking a profit. So if I leave a little on the table, that's okay. That's better than getting a surprise. Okay. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This is the ETF that follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market. And of course, that includes the large cap momentum tech stocks. So that is what's happened here. Look at that. Look at that uptrend. So when I captured this chart today, the Qs were trading at $719 and change. Barely, hardly at all below last week's all-time high at 722. So we can see here, look how high it is. It's trading from down here from October, from the January highs, and actually back to the October highs. It is 12% above the prior all-time highs touched in October and January, again at 637. Now, looking back up to the hard right edge of the chart here, the Qs are trading still above, of course, its 20-day moving average. The 20-day, the red line's coming in here at 695. The green line, the 50 days coming in here at 642. And the 200-day moving average is coming into 614 and change. Now, we know that the Qs made an April low. Everybody did. It made an April low last April, a year ago, at 402. Then it rallied. The Qs rallied like the SPY did in a very strong uptrend. And like the SPY, the Qs pretty much walked up from a year ago, April, the Qs pretty much walked up the red line, the 20-day moving average, rarely falling down through the 50-day moving average. So it was an incredible uptrend, an incredible rally. So from that April low at 402, it rose up here to the October highs at 637. That's a 58% rally. Incredible. So from the highs at 637 here, profit taking dropped it down to 585 in November. excuse me, if you'll remember, we had a dip exactly, excuse me, like this on the SPY in November as well. Then it rallied and then started consolidating pretty much, except for a little drop here and there, along the 50-day and 20-day moving average until it got to the end of January. Then it popped up here to 636. So it was testing this high back here. It was retesting that high back here. And it managed to do that, and then the Qs said, okay, that's all I got left. And it came down and fell through down to 594, fell through the two moving averages down to 594. Then it rallied back up. Look at these, the 50-day and the 20-day here. When price is on top of them, they can act as very nice support. And price falls below them, it can be tough to get back through that moving average ceiling, I can call it. So it rallied back up to the MAs, tried to punch through the 50-day, couldn't do it, then moved along and gradually fell on the war, the news of the Iran war, down to the March low down here at 555. Then it turned around on a dime, rebounded and flew. Look at the angle of this move up. Oh my gosh, that is incredible, especially for an index. You might see it on a stock, but rarely do you see it on an index. So this is amazing. It flew in a steep uptrend from the March low down here at 555 up to where we are now at 719. That's a 30% rise from here to here, 30%, incredible. So it flew up there in April and May to where we are now, again at 719. So we just like, what do we do with this next week? So the resistance here, first you got to find resistance first. So resistance here, we're going to call it at 719. And well, last week's high was 722. So that zone right there. We have potential support at this pivot right here that was just done, and at the 20-day moving average. So say there's potential support here at 695, on down to 660. There's a gap here we can notice. Then we've got this kind of little consolidation here at 660. It could provide a little support. The 50-day down here at 642. And of course, we got the highs back here at 637. So this zone here, 642, 637. Then down to the consolidation highs down here at 615. And that manages to line up with the 200-day moving average, which is coming in at 614. So whenever you get price support and moving average support in the same place, excuse me, that can even make it can strengthen each other, make them stronger. Now, when or if the Qs ever get down to this 200-day moving average, it won't be in the same place anyway, but you need to know, you want to know where it is in case you need to check it out here. Probably sometime in the future, but when you see these lined up the way they are, that's important. Then we're down here, as I said, to the consolidation highs, the 200-day at 614, and on down. So that's some of the potential price support that we do have on the Qs. Again, as I said back in the SPY, I really think that the market may need to take a breather here, may need to pull into a rest stop, as I like to say a little bit. So please, please, please keep an eye on your protective stops. Our final chart today is a daily chart of the Invesco Solar Energy ETF, the TAN. We haven't looked at this in a while. It has 31 holdings. Top holdings include First Solar, Next Power, Enphase Energy, Sunrun, and Solar Edge Technologies. Now, I investigated a little bit, and something that a lot of people aren't paying much attention to is that the use of solar in data centers is really expanding. So yes, they're using energy, and this is an energy, one of the energies that they're definitely starting to use, and you can kind of tell, probably has to do with some of the earnings in here, but you can kind of tell that enthusiasm is starting to perk up here in the TAN. Now, when I captured this chart today, the TAN was trading at $65.77. It's above, definitely above its 20-day moving average, coming in at 61 and change. Its 50-day moving average, the green line, coming in at 57 and change, and the 200-day moving average down here at 50.99, or we call it 51. Now, what I did, because I always do, is I looked at a long-term chart of the TAN, and so you can't see this on this chart. I looked at the long-term. If you looked at a long-term chart, you would see that the TAN made an all-time high in January of 2021 at $125. It gradually dropped from there down to the April 2025 low that certainly everybody had an April low last year. It dropped from there down to April 2025 low at $25. So it went from the all-time high at 125 over the years down to April low at 25. Now, now we can see, if you look at this chart, we can see that it started climbing from there, and on this chart, you'll see where the TAN actually was coming back and rose up to $53 in November right here. So we'll start there. It rose up to $53. From there, it dropped down below its 20 and 50 day down to 45, then started to climb higher, consolidated along the moving averages for a little bit, made its way through January, and then gradually climbed in an uptrend, walking up the 20-day, climbed in an uptrend, rose up to January, and then up to this February high at 61. From there, it dropped down to the March low at 52. And what it did down here was, look left on your screen, it found support from that high, from that November pivot point. So see how those things can happen? That's so cool. Then it rallied from here. It rallied up to 58, consolidated through April just underneath the 50 and 20-day moving averages, and then finally broke above those starting in May, the beginning of the month, and rode right up to where we are now, again, at $65.77. So what I'm going to do here is, especially because I think solar was kind of being ignored, and I think that good, because I like to buy things when they're being ignored and then get the profits from them. So if the market stays reasonably strong in the coming week, but now look, in March and April, everything fell on the news of the Iranian war. The TAN did not. It may have came down. It came down a little bit here, but it did not do one of these nosedives like some did. So that makes it actually sometimes a good hedge for broad market stocks. So what I'm doing here is, if in the coming week the market stays reasonably strong and the TAN stays above its 20-day moving average at 61, I want it above that if I'm going to get into it. I will buy a small position of the TAN in my trading portfolio, and I'm going to make it small because it has bounced up here a little bit off that 20-day. But I want to get in if the getting's good, as we used to say. So if and when the TAN can stay above its 20-day moving average, which is coming in here at $61 and change, I will buy a small position of the TAN in my trading portfolio. I'm going to put my initial stop down here below the 20-day at $60.50. If you want to make it tighter, of course you can. or farther away. If and when the tan climbs above 68, which would be up here somewhere, if it can climb above 68, I will add to my position. And of course, by then my stop will be a trailing stop. Excuse me. So you may want to keep an eye on the tan in the coming week. Also, I'll add on that I am watching Ring right now, R-I-N-G, for a possible entry. It's the iShares Global Gold Miners ETF, trading at around 74. I might nibble on it if it stays above the 200-day moving average. I've also been nibbling on the IGV software ETF, and I'm looking now to do the same with the XLV healthcare ETF. I think that AI and that kind of technology is going to come into healthcare probably pretty quickly. So it's lagged behind, but I think it may start up now. So I'm watching again the XLV. And now please know that at ToniTurner.com we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to trade the trend to profits, right here. How to trade the trend to profits is the perfect training to check out right now. In this program, I show you how to take bigger profits out of the market day in and day out. You will know precisely when to enter a trade, how to manage the position, and when to take gains. Now, our new low price for this program is only $127, which you should be able to make back pretty quickly. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular flagship product, 7 Steps to Successful Trading, how to swing trade successfully, definitely one of my most popular trainings. Again, how to trade the trend to profits, I love it. How to read charts, great for novices. 3 winning setups, great for short-term traders. These are both just $59 each. And how to bottom fish like a pro, another one of my favorites. You will find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen right here, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.